Welcome to this week's video where I discuss what I believe individual investors should focus on over the next 5 to 10 business days before they make their investment decisions. We're going to hear from a number of companies over the next few weeks reporting third quarter corporate earnings. We've seen a lot of volatility in the markets as of late, especially in the tech space. Does the buy the dips mentality still apply today, especially for the tech sector? And energy. We've seen oil prices and natural gas prices at highs that we haven't seen in a long time. What does this mean for investors? Is there still a buying opportunity there? We'll discuss. Corporate earnings. Many companies will begin reporting their most recent quarterly earnings. Usually the earnings season kicks off with the US banks, which is extremely important. The banks, in my opinion, are really the bloodline for any economy. They're going to discuss or talk about how the US economy is faring, what they see going forward, and how they've performed over this past quarter. I think it's very important that investors pay attention to many of these corporations, especially names in the tech space, the banking sector, retail, and really all different sectors of the economy. What are they saying? How are they faring with the most recent supply chain restrictions? What are they saying going forward? What is their look ahead? This will go a long way in helping individual investors make their investment decisions over the next month or so. Recently, we've seen a lot of volatility in the market, especially in some sectors in particular. One sector has been the technology sector. With interest rates seemingly on the rise, the Federal Reserve talking about tapering, a lot of investors have been selling off some of their big technology names. Does the buy the dip mentality still apply here? I believe it does, especially in the tech space. We've addressed this on other videos and other shows that I've been on, but I think going forward, if we continue to see the volatility in the tech space, we continue to see individual investors selling into some of these names, taking some profits off the table, I believe this will represent a good buying opportunity, whether it's tech or even other sectors of the market. Because I do believe as we approach year end, this market will continue to grind its way higher as we are still in a very good environment for individual investors and investing in general. Low interest rates, even though inflation has started to perk up a little bit, we're still seeing interest rates lower for longer. And to me, that is the most important factor as we head into year end and into the new year. Energy prices, whether they're natural gas or oil, are at a point now that we haven't seen in quite some time. Prices are well above $80 a barrel with regards to oil prices, WTI, and natural gas prices, even though they've come down a little bit, are still at high points we haven't seen in many months. What does this mean for individual investors? Does this mean you can continue to buy into this space? Will energy prices or oil or natural gas prices continue to climb? In my opinion, I don't believe so. I think energy, as it pertains to oil and natural gas, is controlled by a few selective countries, whether they be the OPEC nations, Russia, or even the United States and Canada. The more they produce, obviously, the less the costly the price of gas or oil becomes. It is one of the most manipulated commodities, in my opinion, that exists today. So I believe going forward, we're going to start to hear the OPEC nations, the United States, and maybe even particularly Russia talk about expanding production, increasing production. And in my opinion, I think this will cause the price of oil and even natural gas to be somewhat range bound as we move forward. The price of oil getting above $80, in my opinion, was something I never thought I would see. But here we are, the price is above $80 a barrel. Not sure they'll last here too much longer, as I think countries will continue to increase production in the coming months. So going forward, be careful. As part of a diversified portfolio, energy should be in your portfolio, but I wouldn't be overweight at this time.